From Adversity to Abundance, hosted by entrepreneur and seasoned real estate investor Jamie Bateman, is the ultimate guide for active and passive investors seeking clarity, mental fitness, and the confidence to make inspired decisions in the world of real estate. With a decade plus of investing experience across various niches and a background as a combat veteran, former Army officer, and multi-million-dollar mortgage note company owner, Jamie brings a wealth of knowledge and inspiring stories to each episode. Through weekly episodes featuring insightful interviews with industry leaders and solo explorations of mindset and strategy, listeners will uncover actionable advice and tips to overcome challenges and build lasting financial success. Whether you're a seasoned investor or just starting, From Adversity to Abundance is your roadmap to turning obstacles into opportunities and achieving financial freedom.
Welcome, everybody, to another episode of the From Adversity to Abundance podcast. I'm your host, Jamie Bateman, and I'm thrilled today to have with us Sam Morris. Sam is the founder and CEO of Sunset Capital, and we're going to get into what Sunset Capital is all about. Sam, how are you doing today?
Yeah, doing great, Jamie. It's great to meet you.
Likewise, this is going to be fun. I know you have a wealth of knowledge and experience in the banking sector and the financial world, and also in real estate. Let's dive right in. For the listener who may be unfamiliar with you, who are you and what are you up to today?
Yeah, my name's Sam Morris. I'm the CEO of Sunset Capital. Like you said, we are owners and asset managers in the multifamily and storage space. We're based in Houston, Texas, and we have a niche focus just on the state of Texas. It's really where our knowledge base is and where we seek to acquire and operate assets.
Love it. And I think that localized approach is something that gets glossed over often. It's everybody wants to scale and go nationwide. And, we've done that with our mortgage notes business. I think it's a little bit easier in some senses to do that. But when you're talking actual hard real estate, multifamily storage, having that local knowledge is absolutely critical. It's very easy to make mistakes if you get spread too thin geographically.
Yeah, absolutely. I mean, one of the things that we say, because people ask us about other submarkets, and we do have pretty good knowledge in some other very specific submarkets. But if people go, well, hey, why don't you go up to Oklahoma or why don't you go to Louisiana? And my response typically is, it's not that we can't. It's just that we have a knowledge gap there, which is kind of a fancy way of saying we really don't know the markets that well.
Yeah, but having that self-awareness.
Yeah, we'd have to pair with somebody that knows the markets. We want to know the ground there.
Absolutely. I love it. Before we jump back into your backstory, tell the listener kind of what abundance are you living in today personally? Financial abundance. You can get as specific as you'd like, obviously, but why should we listen to this show? You've been through a lot of adversity, and we're going to dive into that. But give us an example or two of the abundance that you're living in today.
Sure. Yeah. I mean, look, I'm a guy with some gray hairs on him, right? And so it becomes a little bit different as you get a little bit older. Your definition of abundance.
That's true.
At some point, you really have everything you need. You have everything that you kind of want. And I always tell people, because when people read my bio, they see the stats, they see the hundreds of millions of dollars in deals that we've done and things like that, and that absolutely is fantastic. It's a great thing to have been able to do that. But personally, for me, the abundance is, I've been married 21 years to my wife, right?
Yeah.
We have 4 kids, and they're all happy and healthy, and I have relationships with them. And so it's probably a little bit different than what, a lot of investors, would probably think of what is that abundance. And probably the easiest way I would say that is it changes as you get a little older of what truly is valuable to you.
Sure.
Time is a big deal, right? So I have a lot of ownership of my own time. And so, I go to every basketball game and volleyball game and cheerleading thing and sports event, and I'm actively involved in it too. And so I got to be coach, and so I wasn't just dad, I was coach. And so living that abundance was probably a little bit different than what a lot of people may think from just
Hmm.
a financial aspect. And although
Sure.
that was important, right? It wasn't what you know success or value was to me.
Yeah, absolutely. And I think makes a ton of sense. I mean, and it does change over time. Your perspective changes over time, and we're not at all saying financial abundance is bad or not important. Like you said, it's what has allowed you to have that ownership of your time and really plug into those family relationships and sounds like kind of being intentional with how you want to spend your days. Whereas if you were tied to a W-2 or just, living paycheck to paycheck, you wouldn't have that abundance in the other areas of your life, like health, relationships, etc.
Yeah.
Um,
And there's nothing wrong with having a W-2
right, right. No,
and
for
those kinds
sure.
of things that really there isn't because you're
No,
providing for family or for yourself. And it's
absolutely.
really where I saw value really was, being present and obviously being able to provide financially. Real estate was one of the things that helped me to do that
Yeah,
in an abundant way. And but really it was that, I want to be present
sure.
of my family.
Absolutely. I love it. Well, let's jump back. I know 2007 was a key year for you. I know before we hit record, you and I started to chat briefly about your first real estate deal. Talk to us about that and how basically there was no pain and you just had success immediately and
Yeah, it was awesome. No
you don't have
problem.
any, no lessons learned and it's
Yeah.
just so easy.
Well, I would even say before we do that, because I was an LP, meaning I was just a passive investor in my very
Yeah.
first deal. I would rewind handful of years before that, which really was when I got started in banking. So right out of college, I went into banking. And I was a grunt, right? So when you start out right out of college, you got your finance degree and things like that. You think you're all that. And then they go, all right, well, you're doing grunt work for the next
Okay.
several years, right? You're going to earn your stripes.
Yep.
Uh,
It rolls
so
downhill, right?
it does. All I did all day, every day for years, too, mind you, was underwrite deals because that's what I was an underwriter, right? I was
Sure.
an analyst. And so all I did was underwrite deals and not just multifamily deals, but all kinds of deals, right?
Yeah.
And so, I
So
mean, I was
let me
learning.
just briefly, that might not sound as monotonous and boring as it probably actually was. So what is it? What does that look like, on a random day that you're
Yeah,
underwriting?
random day, the lenders would come in and go, hey, we got a loan request for XYZ company, right? Or development or property. They would hand you financials, they would hand you rent rolls and say, analyze this for the several years we have, plug in this as a loan number at, whatever the interest rates, and tell us if it's a good deal to do or not. And that's pretty much what I did. And it could be even further than that. It could be, hey, there's some more complexities to this. Now you physically drive out to that property, make sure what they say is there, right?
Hmm.
And that, we can actually do this type of deal. And then,
Hmm.
okay, make sure that the tax office has this, make sure that the insurance is in place for this. So, I mean, you end up doing
Yeah,
a lot more than what you think of. You're
sure.
right. But all you're doing for 8 to 10 hours a day, every single day, is underwriting deals,
Yeah.
going through financials and learning all those aspects of it, really the quantitative side of
Hmm.
the business.
Sure.
And so I chuckle because you do this enough with enough properties, enough deals, you start to see trends and you
Mm.
start to see people we were lending money to and how they made money. And I got to look, I was seeing personal tax returns and things
Mm.
like that. So I got to see
Hmm.
everything, right?
Hmm.
And start going, wow, this person who does this multifamily deal over here, here's how they financed it. Here's what the business plan associated with it was. A year or two down the line, I can see what they did. And now I can see how much money they're making. This is a
That's pretty
really
cool.
interesting business,
Yeah.
right? And so I'm really young at the time. I'm 22, 23 years old going, wow, this is really something. Like this is something that really could be,
Yeah.
big money maker if people just were able to put their money into it. Well, fast forward a few more years and I go, well, now I know who the players are because in my market, I knew who all the players were because we were lending money to them, right?
Hmm.
And going, all right, I wonder I have a little bit of money saved up. I probably had
Mhm.
like $50,000 at that time and going, I wonder if they would let me invest with them. And so being bold enough to go, hey, finding out and going, I've got somebody over here that I know, and he's finally come back to me and said, hey, we're going to go invest in this project over here. Do you want to join us? To which I was like, great. I mean, I've seen it for years. I'm all in, right? Nothing could go wrong, right? I've just done all these things, right?
Right.
And, we're in Houston, Texas. We
Hmm.
buy this property, which I chuckle now at the pricing that we paid for it because it was hysterical. The property was 100% leased when we bought it. It was
Wow.
completely full, right?
Yeah.
About 4 to 5 weeks after we purchased the property,
Hmm.
we had a major hurricane come through Houston and it hit the property directly.
Wow.
And I remember thinking at the time, I was probably 26 or 27 years old, going, oh my gosh, did I just lose all my money?
Right.
Right. And as an LP sitting there going, I'm going to have to figure this out. Well,
Right.
fortunately, because I had the relationships, it was, guys, let's figure this out. And it was a smaller partnership. There was maybe 10 of us or so.
Hmm.
Um, and it was great because they were looking for help too. Everybody was going to be like, let's figure out a way to get this forward. And so I quickly learned everything about insurance. I quickly learned, from a fair housing standpoint, what you have to provide to your
Mm.
residents,
Hmm.
even though you may not have the ability to house them, you're contractually obligated to, right? And the
Wow.
things
Hadn't
you
even
have to
thought about
do
that.
to,
Yeah.
yeah, all the things that you have to do to be able to stay in compliance and things of that nature. And so it was a world of knowledge that I was forced into rather quickly, um, to make sure, my investment, my
Hmm.
little investment was going to do well. And
Sure.
so, what was really interesting too was I started making the relationships with the contractors that we were using who were immediately coming in. But we went from when that storm hit, we went from 100% leased overnight to 12% leased the next day.
Wow.
That's how many units were damaged and offline.
That's incredible.
Yeah.
And just from an underwriting perspective, I mean, looking back, was there anything you could have
Nothing
done?
could have prepared me for that.
Yeah.
Nothing could have, because the numbers and everything, all the projections, performance, there was nothing that could have like prepared us
I think that's a
for
very
the
important point.
storm to
There's
hit.
always risk. You cannot mitigate all risk. You can do your best, but you can't always see what's coming.
You're not
Uh,
going to, yeah, that's an act of God, right? You're not going
right.
to be able to adequately pro forma out an act of God and when that occurrence will occur,
Sure.
right? And
So
so,
I think it's important for people to understand that, when they're getting in,
absolutely,
your capital is at risk,
very
whether,
much so,
yeah,
very much so.
absolutely.
And it's in an illiquid investment too,
Right,
right?
right,
For those that are investing directly into real estate,
right,
these are illiquid instruments. So it's not like I can turn around and sell because there's really nothing to sell
right.
at that point. But through all of that, it was a great learning process.
Mhm.
And you want to talk about adversity to abundance, like this project was it, right? Because about 10 months later, project gets completely rebuilt. Most all the residents moved back in, but here's the big difference. When we went to the insurance company and
Mhm.
said, hey, we got to rebuild all this stuff. I mean, the
Mhm.
property was at that time, it was an early 80s property, right? So it was built out to the style of early 80s, right?
Sure.
We had a fairly large renovation budget that we were going to do to the project anyway because
Mm.
it,
Yeah.
right? Well, with that kind of damage, everything became brand new. Literally everything, right? I mean, from ACs to roofs to appliances to flooring to cabinets, it was all brand new.
That's
And
awesome.
so the pricing of what we would charge for that market was
Yeah.
very different than what we would have charged before, even very different from what we would have charged to
After the fixed up
after we
property.
fixed it up.
Yeah, yeah.
And so all that got taken into account, but we refilled the project in a
Yeah.
very short period of time because
That
the
is a
bulk of
quick
residents who were
turnaround.
living there before came back
That's awesome.
and they were ready to pay more because they got brand new
They got more.
appliances, brand new cabinets,
Yeah.
brand new flooring, brand new ACs, brand new everything. They were
Right.
willing.
So
So
you
we,
had the budget set aside already, and again, you were an LP, but the budget was set aside, And also you had insurance capital now infused into this deal, right?
The insurance capital paid for it, paid for the
Wow.
whole thing,
Yeah.
including the business interruption, which was
So
something that I didn't know. I really didn't know at that time
interesting.
beforehand of what that was.
Right. So it wasn't just to rebuild the property and it was
We got
also
paid for the time it was down as too because
the
we had
lack
business
of revenue.
interruption insurance.
Right.
So it was as if nothing ever happened. We
Wow.
have now a brand new project
Wow.
that people are paying more for. And
That's
so the
incredible.
caveat with that was at about, it was before a year. We weren't even done, we didn't even own it a year. As a partnership, we decided, hey, let's go ahead and refinance the project.
Hmm.
Still own it, but go ahead and
Yeah.
refinance it. And when we did that, we were able to pull over 100% of our money back.
That's amazing. So
And
good.
so all the investors got all their money back,
Right. You
have a
still,
cash flowing asset still, and still have their ownership.
right.
And it was at that point that I was like, all right, I really see
Yeah. The
benefits in
opportunity here.
this.
So now
Yeah,
you only do hurricane deals, right? You're a storm chaser, basically.
yeah, exactly.
Um,
We predict when it's going to come through. But I mean, from that first investment of going,
yeah.
oh my gosh, did I lose everything, right?
Right.
Did I
Sure.
really know what I
Yeah.
was doing? I thought I was well prepared,
Hmm.
right? Because I knew all the quantitative side of it. I knew
Right.
all the quantitative side of it, and I really
Right.
did. But then there was this whole nother world of things that could occur
Yeah.
because I wasn't an operator or had been in it that I really didn't know.
Sure. Right.
Uh,
And even if you'd been an operator, there are always new things that
sure,
along. But so
absolutely.
put a little more granularity to it, like if you would. It doesn't have to be how much money you put in, but what was your, family, your personal situation at that time? Were you making these decisions on your own entirely as far as to put capital into this deal? Um, and how did your mindset change, during that 10 months from a personal standpoint?
Yeah, so I'm a young father, and
Okay.
so mortgage, everything, and this was a lot of money to us,
Yeah.
right? thousand
Yeah.
dollars was a lot of money to me at that time. I'm 20. I was probably 26 or 27 years old,
Hmm.
probably making about 50 or $60,000 a year. So it was a big
Sure.
number.
No,
I'm
that's
gonna,
very helpful to just paint the picture.
yeah, I'm gonna bet on this. Like this is a big bet for me,
Yeah.
right? And to those first few months going, oh my gosh, did I really just
Right.
really hurt my family setting this?
Right. Yeah. I think a lot of our listeners can relate to that because they may have a W-2, and like you said, nothing wrong at all with the W-2. I mean, running a business is not for the faint of heart, and it has lots of emotional and stressful ups and downs, et cetera. But I think a lot of our listeners are W-2 employees and maybe want to dabble in real estate as a passive investor, or maybe want to slowly transition over from a W-2 to running a real estate investing business. And they may be, younger like you were, but because, nowadays maybe an investment of that dollar amount may not change your world if you lost it, right? But that time, that's a huge, I mean,
Yeah, it was a big bet.
yeah.
But the greater, I mean, and honestly, getting all the money back
Hmm.
of a year was really big. But
Hmm.
what was even probably bigger for me was the fact that it was still paying us, call it at that time, it was maybe like $1,500 a quarter, right?
I
So
mean, that's something,
it
right?
was
It's pretty
fair,
good.
good amount of cash
Yeah.
flow, particularly for not having anything in it and
Right.
going,
It's an infinite return, right?
well, and sitting there going, wow, an extra $1,500 a quarter for
Yeah.
this one deal I did that I already have all my money back on, given the fact that I'm making, probably 5 grand a month at that time,
Yeah.
going,
Right. This is
that's
amazing.
that's really big. I mean, that changes. That's like a family vacation or whatever.
Sure.
It was really big to us at that point.
Absolutely.
And going, wow, how can I replicate this really quick? Because I don't have to do this too many more times before
Yeah. You
I'm
can,
making more doing that than I am at my job.
and then you're financially free, really, at that
And
point.
so it was one of those things very quickly going, all right, I want to try to figure out how many more of these I can do. And
Hmm.
now that I got another pool of cash,
You have,
right?
yeah, you can do it again.
Let me go see how I can replicate that. And so I played in that game, and was able to start building more scratch. It's amazing how you start making more cash flow, like how fast you're able to do that.
Sure.
And
Compounds.
so, yeah, and that's really how I got my start, was really as a passive investor, learning all these things you had to do and making sure I had the right operators, making sure I had the right deals, and
Hmm. Yeah.
it was one of those things. The best part of it was I was very grounded on the quantitative side and
Right.
felt I could
Right.
underwrite these things as good, if not better, than the operators,
Right.
and really probably better than the operators, and had a
Probably.
very
Yeah.
they were.
Yeah. That makes a lot of sense. And I love that, we have both passive and active real estate investors who listen to the show. And I mean, everyone's story is different. Sometimes it's the active real estate investor who runs a real estate business for decades, and then they get older and they have, less energy and less, the will to be actively involved in the day to day, and they transition, from active to passive. You were actively involved in real estate underwriting and the financials, but for someone else, and then moved into I guess you used your the passive investing to then move into more of an active role and with Sunset Capital. What year was this that the you had that first deal as an LP?
I think it was 2007.
Okay.
So
All right. So walk
yeah,
us through the next few years with regard to your own personal investing career and experience.
yeah. So I was moving up really in the banking world, and at that time, I was working small banks, and so this is kind of how a lot of this was born out of it too. And they would approach me. I was moving up the ranks in the banking world too, and banks need capital too, believe it or not.
Hmm. Okay.
And
Yeah.
so I learned how to raise money.
Okay.
And I learned how to raise money at a time that it was not really anything that was taught. It was one of those things of, hey, bank needs to raise X amount of millions of dollars, and we need this for our own capital infusion. And
Hmm.
so I got educated on how to raise money.
Okay. What
Um,
I mean, because it's it's definitely a buzz term nowadays, and lots of people out there teaching how to raise capital. But what were one or two takeaways or principles from that?
so this is prior to 2012. Okay. And so there's really raising money prior to 2012 and after 2012 is a very different thing.
Hmm.
And in
Yeah.
2012, that's when the Jobs Act was passed.
Yeah. Okay.
Okay. And the Jobs Act also did some things that effectively allowed, in short, allowed crowdfunding.
Hmm. Yeah.
So you were then able to go out under Reg D, 506C, and start letting the world know via social media, I got a deal, come invest with me.
Right. Right.
That is
Yep.
not how it was prior to that. So prior to that, a lot of guys will call it country club money, things like that. You're literally going through all your relationships, creating new relationships, shaking hands and raising money, $100,000 at a time, whatever it may
Hmm.
be. And you're doing a true relationship
Hmm.
building for the investors that are out there
Yeah.
to grow, at that time, our bank business, right?
And just but drill down on that a little bit. What does one-on-one interaction look like? Are you speaking, because I was actually just on a call an hour ago talking about this with somebody about kind of their pitch for an investment and how to make it better. Um, what would you focus on with if you're at a country club and you're talking to somebody who has money back
Yeah.
before 2012? What are you focused on in that conversation to basically get them to invest with you?
It's actually not too uncommon what we focus on today, and I actually focus on them. I mean, I
I
know
love
it's
it. I
cliche as
love
it
it.
is to say that and go, look,
Yeah.
hey, tell me what it is that you're looking for, because
Right.
we may or may not be a good fit, right? If you
Sure.
come to me and you go, hey, I want this type of investment, and that's not what I offer,
Right.
I don't need to go try to sell you on what we have if it's not what you're looking
That's
for.
right. That's exactly what I was hoping you'd say. I just saw a clip from Alex Hormozy the other day. He's really good at sales and marketing, not so much in the real estate space, but he was talking about how it's not about your offering. It's about the pain that they're experiencing and how you may be able to take them out of that pain and solve that
Yeah,
problem
solve a
for them.
problem for them.
Exactly.
Yeah.
So I love that.
Yeah,
That's
so
really
it's a
good.
little different, and I would say even to this day, that's still what we do. And for me, it's more focusing on the actual relationship behind it too.
Sure.
which really, I mean, I would have no problem establishing the relationship for the SEC and showing them, no, this is a
Yeah,
true relationship. This is
sure.
why we do work together, and here are the notations of our meetings and things of that nature.
Hmm.
Um, but what I would say for that is, when raising money is a different art form, it's very different than real estate, right?
Mm. Yeah,
It's another skill set.
for
And
sure.
so, yeah, that's what you're doing. You're trying to solve a problem. Now, if they go, hey, this is something that I would do and I'm interested in, right?
You can dive
And
more
you
into it.
have that opportunity,
Yeah,
right? In theory, the opportunity should be so hot, so easy to understand, and so prepackaged for them that, hey, I have this opportunity. I'm coming to you to present to you. I don't necessarily need to sell it, right? Because it's
right,
something
right.
that you want, and I
Yep,
have the solution, right? I
right.
have the solution for something that you want or need.
Sure,
Uh, and then it's just up for them to pull the trigger, right? And there's definitely going to be people that are going to be hesitant to do it. There's definitely going to be people that, may need a little bit more encouragement or things of that nature.
sure.
And a lot of times you just, a lot of times I'll use their own words against them and just say, oh, okay, you told me you were looking for an investment that could pay up to, 5% cash flow on an ongoing basis and
Hmm.
was going to have this kind of a return in 5 years. Here are the numbers associated with that. So I've shown you kind of to our best estimate that this would fit what you're looking for.
Right.
What's the holdup? Like, what is it
Sure,
that what other aspect has come in that's not what you're saying that you exactly wanted? So
sure. I love that. All right, so you were raising capital for the bank, right? That you were working for. And then how long did you do that for, and what happened after that?
I did it multiple times. So we had a few exits. I stayed in banking. My last bank sold in 2018.
Okay.
Um, and it was really at that time when we sold our last bank that I decided, all right, I'm going to do real estate full time. Um,
Okay.
and really what it was is I had to see that through, meaning I had a lot of people that had a lot of money in the bank, and I
Mm.
wanted to make sure that it was completed and
Hmm.
cycled so that
So
everybody
you
had money.
you owned banks, is that right?
Yes. In short, we worked at them, and
Yeah.
I worked at them for the most part. And
Yeah.
then, when you say own, I mean I was a very
Small
small
owner. Yeah.
owner.
Got it.
And even today, I'm still a very, very small owner of the
Hmm.
bank that I'm on the board of. I don't work at the bank every day, but I am
Hmm.
on the board and a founding director of the bank. And
Gotcha. Okay. So, and then why did you transition to real estate? You're already in the real estate game, but really what's going through your mind at that point that real
yeah,
estate is?
at that point it was, look, it's time for me to do this. This is that next step, and I really need to devote that full time to being able to, sourcing deals, asset managing the deals, working the investor dollars that we're putting into these things, and starting to scale that way. So
Gotcha. And approximately what year was this that we're talking about?
18,
Oh,
so right at
18.
the beginning of
Gotcha.
19,
Yeah,
yeah.
you just said that. So how did the jump back though about 10 years? How did the financial crisis affect you and your own investing
Yeah.
approach?
Um, I was always a net buyer. And the irony with that is if you were acquiring assets during that time frame,
Hmm.
you did very well. And the
Sure.
greatest multiples that we had over the periods were the deals that we bought in that time frame. We're actually hoping to execute the sale of one this year. So, I mean, we've owned it a long time. We bought it in
Hmm.
2010,
Okay.
but the multiple on that deal will be significant. I
Just
mean, we've already refinanced
astronomical.
it twice,
Wow. Yeah.
um, pulled a lot of cash out of it, and it's time to actually
Yeah.
sell, call it
Gotcha.
an fatigue or whatever, but it's time to sell and
Hmm.
pull another large multiple out of it when we do that.
Yeah. And so with underwriting, I mean, we have a for our when we buy mortgage notes, it's we generally call it due diligence because we're not actually lending, so we're not in my mind, it's not technically underwriting, but it's essentially the same, very similar process where we're evaluating the deal, checking all the boxes, like you mentioned, insurance, taxes, and all that stuff. And it's very important to follow that checklist, right? I obviously, um, but at the end of the day, if you buy well, if you don't overpay, you generally have decent options on the exit, right? And
Mhm.
you could maybe miss something in underwriting or be off on your pro forma, but you didn't overpay. When you overpay or you time the market at the top, I mean, you're really pigeonholing yourself into a bad scenario on the exit. So what would you say? I mean, what were some one or two lessons learned other than buying right from the 2008 financial crisis?
Yeah, it was a different time frame than what we've gone through, call it in 22, 23.
Hmm.
Um, just because it was just that it was a financial crisis
Hmm.
from the standpoint of the lenders were impacted, right?
Yeah.
And they were the one, and you have to understand that too. When you're going into a real estate deal, your lender is your largest partner. In general, they
Hmm.
are because they're typically lending more than half the money in the
Sure.
deal.
Right.
They
Right.
really are
Makes
your
sense.
largest partner
Yeah.
deal. And we call our lenders our partners. And so that was one of the things that we always said, our largest partner in the deal,
Hmm.
right? We have to make sure that they're communicated well, there's transparency, they know what's going on, and so that we can continue to be good partners with our lender,
Sure.
right? And as a note guy, I'm sure you really appreciate that,
Yeah.
right?
Absolutely.
Uh, that being said, at that time frame, it was pencils down for everybody.
Mm.
Meaning there's no more loans. And when that occurs, the market will stop. And it almost at any pricing too. You really have to get extremely creative, finding alternative sources of what you can do, talking to those alternative lenders to be able to get deals done. And even the agencies were severely impacted. And
Hmm.
so the '08 financial crisis, um, was much more dramatic, in my opinion, than anything we've had since. Just because if you look at what's happened, more recently for
Hmm.
this cycle that we're in, lenders are still there. They still have liquidity. They're still in the game. Therefore, there's still transactions that can occur,
Sure.
right? There was a scarcity of mentality at that time,
Yeah.
opposed to abundance.
Right.
You know,
Right.
quick plug
Absolutely.
there. But it really was a different type of game because you really had to out operate the guy next to you. And really what I mean by that is if you're a multifamily guy and there's another apartment next to you, you're going to be competing, tooth and nail to be able to get that next person to come in the door
Hmm.
to stay
Yeah.
with you because you need the income to be able to cover your note. I mean,
Makes
so it
sense.
really was um, a fight to operate and out operate the competition in your area.
Mhm.
Just a very
So,
different way of looking at it, but that's really what it
yeah,
boils.
got it. Now, we talked about your first deal as an LP, how that went south, but then turned around. Uh, have you had any deals that really just went south and they were real losses for you?
No, I mean, we've had a deal where we got caught up in COVID. I would tell
Hmm.
you that, and it was a full gut remodel deal,
Mm.
and the supply chain issues
Yeah,
overshot our spending, by a tremendous amount. But to be able to get the deal done, that's what we had to do. Um, we haven't lost money on that deal. We have had to infuse capital into that
gotcha.
deal.
Yep. Hmm.
When we sell right now, it'll probably be break even.
Got
Uh,
it.
but we haven't lost anything yet. And part of that is doing what you say, buy right,
Yeah,
try to
yeah,
acquire something at a price point that you'll be able to get out of. And so,
sure.
I mean, I don't want it to sound like, I don't have battle scars. We definitely have
Right.
scars, right?
Sure.
And I think most, even good sponsors, good, operators, they're going to have some battle scars and they need
For
to,
sure.
right?
Yeah,
To have been around the block a few times, you have to have a few of them.
absolutely.
Um, it's
Um,
just we haven't. No, we haven't. Fortunately, we have not had a loss on any deal we've done, and um, we want to be able to keep that streak alive, obviously. And we've been
Absolutely.
through cycles, so
For sure. No, I mean, look, let's not seek out losses just to get some lessons.
for
But
sure.
um yeah, that's definitely you definitely have an impressive track record. So um dive into, what Sunset Capital is up to today, specifically, and then I do have a bunch of rapid fire questions, but
Yeah.
what are you
So
up to
we actually
today?
have some exciting things. So from a scale perspective, and a time of life perspective too, and we have not actually even gone out, publicly too much with this too. We're actually going to be merging up with another larger group.
Oh, wow.
Uh, yeah.
That's
And
exciting.
so we're going to add about, call it close to $750 million in assets to the platform.
Wow.
And it's just kind of help us, and it's all Texas still, but it's going to
Hmm.
help us continue to grow, specifically in the multifamily space. Um, and we're actually really excited about that. So that merger really takes place here soon, and
Okay.
it's going to be a kind of a pretty exciting thing. I think everybody on both sides are just really excited about it. We'll
Yeah.
a little over 150 employees total when we do that, and
Wow.
it's going
Wow.
to be.
So what's your role going to be in that
I'll be a
after?
partner in that deal, and I'll still be in charge or overseeing investor relations, asset management, and
Okay.
acquisitions. So the
Okay.
things that I really have great skill sets at,
Sure. So,
continuing to
and I
oversee.
imagine you can't say who it's with, yet, but um, what is your company bringing to the table that that company needs?
Yeah, great question. So the aforementioned gray hairs probably is one of those things.
Right.
Uh, and the fact that I have been around the block a few times really helps
Yeah.
uh, with something like that. We also have a very good retail investor base,
Hmm.
right? We'll be able to show them these new great, wonderful deals.
Hmm.
We partnered with this group on a handful of deals too already, and so we have, it's actually going to be something that's not too unfamiliar for the investor.
Gotcha. You've dated for a while.
Yeah, we have. And so it'll be a good marriage. And
Yeah.
so which is what we're excited about. But yeah, I mean, realistically, those would be the things. And having, like I said, the gray hairs are
The
probably
experience and the reputation and the retail investor base sounds like. Got it. No, that's super exciting. That's really cool. Is that going to change your day to day personally, your week to week?
probably a little bit from the standpoint of it'll take away some of the things that I don't like to do on a daily basis
That's good.
because of the team that they have a much larger team, and so there's a lot more people who can share the load
Sure.
uh, and allow me to focus on doing the things that I really love doing and that I'm good at, and
Yeah.
uh, kind of double down on those things that you're really good at and offload the things that I'm not good at.
Right. Well, I
With
think that speaks to the point of, and you mentioned your perspective on abundance changes over time, and I think a lot of other things, change over time when there are different seasons in life. Let's not gloss over the fact that you were doing this boring administrative underwriting work for years and years and years, and it's not really what you wanted to do every day. So my point being,
But I had to do it. I
but you
had to
had to
do
do
it
it.
and learn it and
That's
know it.
that's exactly right. So just because you have a college degree and you're 24 years old does not mean that you should take Sam's advice as far as what he's up to right now, or take his advice, but don't model what he's doing right now because you need to do some things that you don't want to do. You can't necessarily offload the tasks you don't want to do. But Sam, you've been able to build up your own personal portfolio, your own experience, your own business skill set so that that's enabled you to offload the things you don't want to do, and also, like you said, live intentionally, have ownership of your time on a personal and relationship level. So it wasn't this way for you fresh out of college. Would you
No,
agree?
and I laugh because I had somebody come up to me and he said, "Man, you're like an overnight success." And I just chuckled. I'd like, well, I guess as decades is
Yeah,
your definition of overnight success, then okay. I mean,
right.
uh,
I don't
it
really
took
think
time.
there's no such thing as that. But um, all right, you ready for some more rapid fire questions, Sam?
Sure.
Awesome. What is one thing that people misunderstand about you other than you being an overnight success?
Yeah. I'm fairly matter of fact. And so I have a tendency to get to the point rather quickly, and part of that is I'm trying to be efficient with my time, and so
Sure.
sometimes that can come off as rude or
Hmm.
inconsiderate, and it's really not. It's just more of, hey, let's
Just
get to the point
right.
of
Sure.
whatever it is we're trying to get to, and so it's something I have to consciously work on too, because I recognize not everybody appreciates that style of communication.
Sure.
Others do, but that's something
Yeah.
that sometimes I get misunderstood of,
Hmm. Makes sense. I think I can relate to that. What's one of your biggest failures, and what did you learn from that experience?
oh man, gosh, so many to choose from at that point. I would say, from a business perspective, um, I'm fairly ADHD as well, and so I
Mm.
have a tendency to put blinders on
Hmm.
and just get from A to B,
Hmm.
right? And you sometimes ignore and or don't see the peripheral. And so having an understanding that I sometimes need to gear down and really survey the scene, look around, don't just jump right into it.
Yeah.
Uh, and I would say it has led to signing contracts I probably shouldn't have signed, doing
Mm.
deals I probably shouldn't have done, things of that nature. Nothing from a major perspective, but
Right.
having getting into partnerships I shouldn't have gotten into, things of that nature.
Yeah.
Because you're one track mind, get me from A to B,
Right.
without gearing down, surveying the land and the landscape, and going, hey,
Yeah.
let's see this from every different angle that you can
Sure.
before you jump into it.
It's tough because, it's also it's a blessing and a curse because you wouldn't have reached the level you have if you didn't have that drive and that. So,
Yeah, but at the same time too, it's definitely can cause a lot of the heartache.
sure. Absolutely. Um, if you could go back and give your 18-year-old self some advice, what would that be?
Patience, continue to learn it, right? And keep
Yeah.
reading.
Good.
You understand you're going to be a lifelong learner,
Mm.
and that you don't know everything, but you're going to have to continue to learn, and
Right.
you're going to redefine and redevelop yourself many times over.
Love it.
Uh,
That's awesome.
and yeah, that's
If
probably
you
the easiest.
if you could have coffee with any historical figure, whom would you choose?
You know, I've been asked this before too, and there's really two people. I mean, I think the typical person would tell you Jesus Christ. Uh,
Uh, yeah.
I think that's a common one.
Yeah.
Uh, but believe it or not, my second person is probably not as common, but it's somebody who's very fascinating to me, which is Mother Teresa.
Mm. That's a great one. Yeah, I love that. If you were given $10 million tomorrow, what would you do with it?
I'd probably invest it all into real estate. Not that it wouldn't change my life, but it really wouldn't change too much of what I do.
Hmm.
And I know I don't mean that in a cocky way at all.
No,
It's just, when you get to the point in the stage where I'm at, I'm very happy and comfortable where I'm at. But yeah, I'd put it into real estate and use it for legacy investing.
got it. It's basically do more of what you're already doing.
Mhm.
What is a challenge? I know you have this merger happening. It sounds like it's close to being finalized. What is a challenge that you're facing in your business right now?
Yeah, the market is, and that's part of the reason for the merger too. The market is tough. I mean, the amount of churn that we're having to go through, and the amount of time that it's taking for me to go and handle a lot of the things that really just are inefficient, for us being able to get deals done, um, it probably is the biggest challenge, right? We knew that this year was going to be a pivotal year for us, and we were either
Hmm.
going to merge in, or something else was going to change. Some of the
Hmm.
business dynamics were going to have to change, and really it was for my own time.
Mm.
So.
Got it. Um, what, in your opinion, is one of the most important personality traits that someone needs to be successful in either finance or real estate?
Yeah, it's really a skill set. If you can sell, if you know how to sell, and it really doesn't even matter what industry you're in or anything, but you know how to sell, you will be successful in whatever you're doing. And understanding too that we sell every day, right?
Mm. Yeah.
Every day we're selling, whether you realize it or not. You're selling your spouse on, hey, here's what I want for dinner. You're selling your boss on, hey, here's why I'm good at this aspect. You're selling every single day,
Hmm. Right. That's a
and
great point.
understand that that's a skill set.
I love that. What's something controversial or unconventional, strategy wise, that you've employed in your real estate business?
Ooh. We do a lot of things that I always thought were just logical. Um, and I've come to learn that not everybody will replicate it too. And so, in particular, when you're talking about, um, even take a deal, right? We would do a refinance or something like that, and we'd win big. The investors would win big when we did it.
Hmm.
And I'm such a big believer at the on-site team, the one who executes the business plan for you, that they're so valuable, that they need to benefit in that.
Mm.
Um, and we will give pretty significant sums
Mm.
to people that don't make significant sums
Mm.
when we go through those kinds of wins. Um,
Nice.
and it's always shocking to me that people
Other
think
people
that
don't
is
do it.
just so outside the box and so
Right.
weird, and going, well, no, I mean, if I was able to return, say $5 million to our investors,
Hmm.
is it really out of the realm to go, hey, we're going to give this, you know, property manager $25,000 as a bonus? She just helped
Right.
us get $5 million by helping us execute the business
Right.
plan. And at the time, that property manager may only be making $50,000, $60,000 a
Right.
year.
So that's huge
So it's a really big deal
for
to
them.
that person, but
Right.
it's also a really big deal what she did for us.
Right.
So I just,
Yeah.
it was one of those things where I was like, no, I mean, that's the person who we entrusted with a multi-million-dollar business,
Right. I love
helped us
that answer.
execute it. And it's kind of surprising that, when I, really got through and talking to other people, they're like, my gosh, why would you ever do like that's insane? And I'm like, well, but if
Yeah.
we didn't have her helping us do it, it wouldn't have happened, right? I mean,
Right.
like, and maybe there was somebody else out there that could help us execute it and things like that. But
Sure.
this is the person that helped us get to that point, and
Yeah.
they need to be rewarded. And
Well, and I imagine she wants to work with you again soon.
absolutely, yeah. Like, so
Um,
where's the next property, right? That you guys
right.
are doing this on, or where's the next property you're going to sell, whatever it may be. And
Right. Love that. That's really good. What is a book or two that you could recommend? You mentioned being a reader, lifelong reader. What is one or two books that you could
yeah,
recommend?
the one I just finished a couple days ago that you and I were talking about
Yeah.
is "No One's Coming to Save You."
Yeah.
Uh,
Yeah.
Lieutenant Colonel Scott Mann, I think, is the one who wrote that.
Okay.
Oh man, I have a lot of books that we read. I mean, I like reading things like Atomic Habits,
Yeah. Great book.
that
I
nature.
just
There are a lot
gifted
of
that
great
to
books from
someone.
a real estate perspective. Everybody quotes like Rich Dad, Poor Dad, and
Right.
books like that. There's another one called Richest Man in Babylon, which is a really
Yes.
easy read. But there's a lot of great real estate books that are out there.
Yeah.
Um, and I would tell you, reading is one of those things that's it's gonna be just good for you in general, but it'll absolutely help you level up, um, and give you a broader base of which you can draw upon.
Love that. How do you like to serve others, Sam?
Yeah. Oh, I'm pretty active in our church. So I'm a deacon at our church here. I get to be, we have men's groups. We have all kinds of fun things that we get to do, but the church is really where we get to do a lot of our service. But we also do some things too with our investor groups. So we may have every year we do a thing and it's through our church, but we may invite our investors to come out and we sack groceries for families in need and things of that nature. So there's a lot of things that we get to do throughout the year. And that dopamine hit that you get from being able to do that is something that's pretty contagious. A lot of people want to be involved in that kind of stuff. And so we have several things that we get to do throughout the year
Love
uh,
that.
that we're excited about, I should say.
That's great. Um, what's one question that you wish I'd asked, but I haven't?
Ooh. You know, I think it's more of a, in particularly for, the investor that's out there is, having, so many questions we get from investors are, hey, how should I get started? Right?
Right.
What is my next step? And I tell everybody pretty much the same thing. I said, before you go out and invest into a deal, if you got money and you're ready to go, it's okay to put a little bit of that money into you,
Mm.
meaning to go take a class, go join a mastermind, go read
Hmm.
some books associated with this, and
Yeah.
get your education to a level where you're comfortable going, you know what? it's a lot of money that I'm about to go invest, but I've done the work and the education behind it to be able to go, yep, I'm ready to go
Hmm.
into this deal. And I have an understanding of what this is going to be
Yeah,
uh,
that's really good.
from the things that I've taught myself. And so that's really the big question. I think a lot of investors go, hey, I really want to do this.
Right.
But I always tell them, yeah, before you jump into it, though, it's okay to put some dollars into you and go find these educational groups, find whatever masterminds, find something that's going to speak to you.
Sure.
Or go, I mean, for crying out loud, go to YouTube. There's a
Yeah,
thousand different resources that are out there for free that you can start to get educated from.
sure. Love that. That's really good. Before we sign off, how can the listener interact with Sunset Capital, whether they're a passive or active real estate investor? How can people work with you?
Yeah, easiest way to do that is to go to our website, sunset-capital.com, and there's a slew of resources on there and easy ways to get in touch with us. And we love talking to new investors. We love talking to other actives. Um, we do a lot of fun stuff throughout the year, and so happy to speak to people that are out there.
Love it. Sam Morris, any parting words before we end this amazing interview?
Man, just thank you so very much. I appreciate the time. I appreciate you having me on, bud.
Absolutely. Appreciate your time, Sam. And to the listener, we also appreciate your time, which is your most valuable resource. Thank you for spending it with us. And we do appreciate if you share this episode with a friend who might benefit from that. Thanks, everyone. Take care.
Thank you for joining us on From Adversity to Abundance. We hope today's episode has equipped you with valuable insights and practical advice to elevate your real estate journey. For more inspiring stories and resources, visit us at www.adversitytoabundance.com. If this episode has inspired you, please share it with a friend who could also benefit from our conversation. Together, let's turn adversity into abundance. Until next time, keep building your mental fitness and your real estate empire.